From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges Podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Hello ladies and gentlemen, this is Houston and welcome to episode 31 of Trading Edges. First and foremost, Happy New Year. I want to begin by wishing everyone a Happy New Year. May this year bring you peace, joy, health, and prosperity. And secondly, I want to thank you all for tuning into this podcast and for all the positive feedback, stories, and support. This podcast is truly a labor of love, and I'm grateful that many of you have found the guests and the podcast to be inspiring and empowering. This is why I do it. Now, in this week's episode, we're going to be going over a topic that I'm deeply passionate about, and that is cultivating peak performance in your trading. And in this show, I'm going to share the lifestyle and learning strategies, the psychological states and traits, as well as motivational processes that I've found that top traders embody. I've covered this through my own research and experience on peak performance, as well as just based on the dozens of interviews I've done for the podcast, through my meetup group, and with the traders that I've worked with. Now, for this episode, I've also recorded a video presentation with slides to go along with the show. So if you'd like to see the video and slides, then head over to thetradingedge.org/episode 31. Again, thetradingedge.org/episode 31. Now, before we get started, I wanted to let you know that at the end of last year, I finally rolled out my latest development program called The Keys to Your Trading Business, which goes into everything it takes to create a successful trading business. Now, most traders focus on just trading, and they miss out on this whole other aspect, and that is they neglect to run their trading operations as a business. So if you're truly interested in trading for a living and not simply as a hobby, then you need to begin to think of your trading as a business and structuring it as such, right? So the program includes how to structure that profitable trading operation. That is creating a business plan and a trading plan. Yes, a business plan, not just a trading plan. The key elements around creating the right mindset around, your business. How to create lasting behavioral change so that you do what you have in your plans. The tools, the resources, the routines that are required for a successful trading business, as well as some of the resources like setups that I use every day. I show you, if you struggle to put all of these pieces together, this will shortcut your journey and save you thousands of dollars. But more importantly, it'll shave off hundreds or thousands of hours, which you can't make back. You can always make the money, but you can't make back the time. So if you're interested in learning more about the program, head on over to thetradingedge.org/go. Again, thetradingedge.org/go. And as listeners of the Trading Edges podcast, I wanted to give you all an opportunity to shortcut your trading success. So what we're going to do here is, if you leave us a review on iTunes, we're going to go ahead and provide one lucky person with a free copy of the program, with one free month of one-on-one coaching with me to teach you, all the ins and outs of structuring that business, how to, consistently extract money from the markets, and to build that trading operation you've always wanted. So head on over to iTunes, and after we hit 50 reviews, that's 50, we'll go ahead and pick one lucky person that will win that program as well as that one-on-one coaching, which will be in value of excess of $1,000. So once again, if you're interested in learning more about the program, head on over to thetradingedge.org/go. Without further ado, let's start the show. Welcome to this presentation titled Cultivating Peak Performance in Your Trading. And this is actually a discourse based and inspired by a dissertation by Dr. Tricia Cardner, as well as just the dozens of traders that I've interviewed, spoken with, and worked with, along with my own personal research and experience. And so in this presentation, what we're going to do is, or rather this discourse, we're going to talk about the lifestyle and learning strategies, the psychological states and traits, as well as motivational processes that peak traders embody. These are the things that peak traders either do, or the habits or traits that they embody that allow them to sustain performance for long periods of time. That is, to achieve consistently, profitably, as well as just running at a high level. So if we take a look at the performance framework and basically all kind of the traits and processes and strategies that these peak traders that I see embody, you can kind of bucket it up in 5 categories, and I've listed them as follows. You have lifestyle strategies, then we have learning strategies, we have psychological states, then we have psychological traits, and then motivational processes. So what we're going to do in this discourse is that I've identified a number of key, as I mentioned before, routines, habits, traits, strategies, principles in each one of these buckets. And I'm going to try to highlight the most ones that I think resonate the most, the ones that are the most pertinent, so that you can begin to reflect in your own life, right? So as I go through some of these strategies, states, traits, and so forth, reflect on your own trading, your own lifestyle, the way you learn. Where do you fall in that spectrum, of some of these traits? Do you embody them well, or is there work to be done there? And if you have work to do, what small steps can you begin to take to begin to, again, embody or develop some of these skills? Again, if you're already performing at a high level in some of these areas, then you'll have that box checked off already. So what can you do to begin to, again, maintain that skill and then keep it honed at that high level? Okay. So we're going to go through each one of these categories one by one, and then go through the most pertinent principles and processes in each one of these, and traits as well as traits in each one of these categories. Let's first start off with lifestyle strategies. So one of the most important lifestyle strategies as it pertains to trading is first the ability to pace oneself. I think I see all too common in trading, is especially with new traders, is that they come in fast and they also fizzle out fast. And this is because what we need to realize early on is that trading is a journey. It's not a destination. There isn't some sort of finish line where you're done, right? Whether that's a monetary finish line or, a qualitative finish line where if you achieve a certain level of status that you're finished, right? Because there's always higher levels in trading. You can always try to make more money. You can always try to become more efficient. You can always try to become a better trader. And that's, there are many degrees to that. So there isn't any sort of finish line. We can simply, clap your hands and say, I'm finished here. And so the key is that we need to basically pace yourself and think of trading more as a marathon versus a sprint, and to approach trading as such. That means we're not going to try to burn the candle from both ends for too long of a period of time. Yes, there are times where you have to work in sprints, but we're not going to try to think of trading as one long sprint. Because at the end of the day, I think the metaphor that helps best is that trading isn't a hustle, right? I like to think of trading more as growing a long-term business. If you were to think about this analogy, maybe opening up a restaurant, would you try to jam in a restaurant and have it, have a restaurant built out in the course of, 4 weeks or 8 months or a quarter? Of course not. If you were to open a restaurant, you'd have long-term plans. You'd have a 1-year plan, a 5-year plan, a 10-year plan. Versus this idea that I see a lot of traders have is to try to make a quick buck versus the slow bucks approach, the slow and long-term money approach. And this means becoming more selective, right? It means being more selective about your activities, but being more selective about how you invest your energy, where you invest yourself, where you invest your money. All right? So the next key trait is to have proper life balance. And it's very common to see too many traders, they over-identify themselves as traders. That is, they don't have the proper life balance. That, you see too many traders, they trade to live and they don't live to trade. They find all their meaning in trading, and their lives outside of trading are shambles, right? They've given everything up, they've sacrificed everything, and if and when they do ultimately reach some trading success, they've left, a broken life behind. And so the counterpoint to this is to have a rich life outside of trading, because that rich life will actually support your trading for the long term. So having this life outside of trading allows you to, prevent things like burnout. When you have the social support, when you have the mental support, the community, the family ties, all these things allow you to live and work in balance. And that means your trading doesn't bleed into your life, and likewise and vice versa, your life doesn't bleed into your trading, because both those things are harmful. That duality is harmful. So having that strong polarity and having that strong balance is important. Let's talk about the next trait, and that's physical fitness. We just talked about it in passing in the previous points there. But physical fitness is so important, not only because, of course, physical fitness allows you to maintain a strong body so that, you're able to work for the long term. So you don't want to be a sickly person who, has poor levels of energy and is unable to maintain focus for very long periods of time because you're physically sagging. And I think we all get that. But key to physical fitness is this side benefit of stress reduction. So I think most of us have this understanding down intuitively. There's nothing that feels better sometimes than, if you feel stressed out, than to work out, right? To go for a quick run, to hit the gym. Sometimes that's the hardest time to go, right? Is when you're stressed out, but that's sometimes the best time to go. So stress reduction, is certainly something not to be underplayed, right? It's very, very important in terms of the life of the trader, how you manage your stress. You just can't just let that accumulate over time. We'll talk more about this later on in some of the psychological processes. But having an outlet for that stress, a physical outlet, because stress is physical, it's not just mental. There are physical ramifications to stress. You need to be able to work that off. Now, the third big benefit of physical fitness is the ability for it to actually improve learning. And so trading being a mental game, right? We can think of exercise like Miracle-Gro or fertilizer for your brain. There's been a lot of great research now where that shows, with proper levels of exercise, there's a cascade of neurotransmitters that trigger when you do exercise that basically is a catalyst for this thing called neurogenesis, which is the ability to basically create new brain cells. If you want to be active, like mentally active, and have, be sharp for the long run, we need to be thinking about these things. Things like BDNF, IGF-1, VEGF, FGF2. These are all things that are triggered when we do physical exercise. There's a great book by Dr. John Rady called Spark. I really highly recommend that if you want to dig into the sort of the neuroscience around exercise and the benefits to your brain when you do physical exercise. And there's just so much literature around that now that really, if you're really serious about trading for the long term and having sharp mental acuity, you need to be thinking about physical exercise. It doesn't have to be heavy weightlifting, but it's you need to have moderate bouts of anaerobic exercise as well as aerobic exercise to create this sort of trigger in neurogenesis. So I highly recommend that book if you want to learn more. Nextly is active rest and recovery, which is kind of the other side of that coin in terms of physical exercise. We need to have active rest and recovery. And here's, this is a picture of a candle burning from both ends, right? And you see too many traders do this. They pound coffee back morning to night, right? Trying to trade all hours of the day or trying to stare at the screens all day long without proper active rest and recovery. And so active rest and recovery can mean a number of things, right? For a lot of people, this could be something as simple as taking the proper breaks during the trading day, right? So getting up every 30 minutes, every hour, and walking a bit. Maybe taking your lunch hour to walk around the block, to walk around your, in your neighborhood instead of sitting at the screens and eating lunch all day there, right? So creating the time for that to happen. Or it could be something like yoga, surfing, biking, walking, whatever it may be for you. It should be something that's active and not just you sitting on the TV and watching YouTube and television videos, right? It's something that's going to allow your brain to relax and your body to open up and begin to recover, to get into that kind of sympathetic state where you're not in that constant fight, flight, freeze state. And the other part of active rest and recovery is simply mindfulness. 2/3 of all the traders I've interviewed for the podcast actively meditate. And so, there's so much to be said about having a calm mind, right? And this allows you to, when you have that calm mind, it allows you to also begin to reduce that parasympathetic response or that fight, flight, freeze response, and to begin to trigger that kind of sympathetic response to begin to, rest and recuperate. All right. So let's now talk about different learning strategies. So the first learning strategy that's really important as it pertains to trading, and we're shifting gears here from lifestyle strategies that we just talked about to learning strategies. And the first learning strategy I want to share with you is this idea of immersion. Most peak traders that I talk to are deeply immersed in trading. That means even though you may not be trading every single minute of the day, the best traders I know are in tune with the markets. And the only way you can be in tune with the markets is to immerse yourself, right? You see it very common where, it only takes several days to get disconnected from the markets, right? If you've ever gone on vacation and you come back and you've kind of lost that edge, you've lost your feel, that's because you weren't immersed. Now, you didn't have to be trading every single tick, every single minute of the day, but not being immersed is one thing. And then the second part of it is, physically constantly thinking about their game, right? So thinking about the markets, but also thinking about you as a trader and how you're trading the markets. And I love this quote from this great movie. If you haven't seen it, it's a movie called Jiro Dreams of Sushi. And the quote goes, "You must immerse yourself in your work. You have to fall in love with your work. You must dedicate your life to mastering your skill, and that's the secret of success." And that's from Chef Jiro from that fantastic movie, Jiro Dreams of Sushi. And if you haven't seen that movie, pick it up. It's a real eye-opener. If you ever want to see what real skill development looks like, what it takes to become a true master, then look at Chef Jiro. He is in fact the best sushi chef in Tokyo, which is basically to say the world, and that's saying a lot, right? So you'll see some of his apprentices. Some of these apprentices, for the first several years of their career, like the first 3 to 5 years, all they do is cook rice. You think about that, right? All you're doing 8-10 hours a day at the restaurant is learning how to cook rice. So how good of a rice cooker would you think you'd be after 3 to 5 years just of creating rice every day, making rice every day? And that's because they're immersed in it, just as we need to be as traders. That means we're constantly thinking about our game and reviewing, actively discussing with other traders, other colleagues about the markets and our trading. That's how you become immersed. Now, for some of you, it's easy. We work on trading floors, and we have the ability to bounce these ideas back and forth with other traders. But for those who work alone, then you have to find those outlets to allow you to have that social support, because it really, really allows you to go a lot deeper versus just sharing a post on a forum somewhere and having a few comments. Okay. The next one is deliberate practice, and I actually just did a webinar on this about a month ago, a little less than a month ago. I did a webinar on deliberate practice, and I'm sharing a quote here that I often share, and this is from the Navy SEALs. "Under pressure, you don't rise to the occasion. You sink to the level of your training. That's why we train so hard." Because unlike the common misconception that people rise to the occasion, the Navy SEALs know that we don't rise to the occasion. we rise, or we basically drop to our lowest level of training. And so guess what? If you haven't developed your skill to a high level, you can only perform as well as your highest trained skill. Because in times of stress and duress, in technical parlance, kind of neuroscience parlance, your prefrontal cortex, that rational part of your brain that keeps a lot of ideas, judgments, inner thinking, deeper thinking, that actually turns off in times of fight, flight, or flee. And so all these good intentions and all these plans that you may have had for your trading, that disappears when you actually get stressed. And this is why it's so important to have this idea of deliberate practice, because you only can perform at your highest level of competence. And in that webinar that I spoke about a few moments ago, I went through this adult learning model, otherwise known as the conscious competence model, and I recommend going back to that particular webinar. So you can find that on my blog or on YouTube. But I spent a good deal of time talking about the four quadrants in terms of that conscious competence model, being unconscious incompetence, conscious incompetence, conscious competence, and unconscious competence. And why there's a myth that simply, practicing is enough. You often hear that, there's a saying that says, practice makes perfect. But, all the literature, all the research says that's not true. What's actually true is that perfect practice makes perfect. And it's not even so much the hours, and, I talked about this as well in that webinar. There is no 10,000 hour rule. That's a myth. It doesn't take that long necessarily to develop a skill. It could take that much time to develop mastery in a particular domain, but even then the 10,000 hour number is completely arbitrary. And I highly recommend you check out that webinar if you want to hear my discourse around that. Okay, but if you were to dissect your trading and to overlay all your skills on this quadrant here, on this framework called the conscious competence model, where do your skills sit on this quadrant? If you have a lot of skills where you're consciously competent, that means you actually have to actively work on that skill to get through it. Then, as I mentioned already, guess what? When you get stressed out, that quadrant, the top, the bottom right-hand quadrant, goes offline. You cannot physically access those skills in that quadrant when you're really stressed out. And this is why I see so many traders who have really good intentions, they have great plans, but they physically do not have the capacity to actually enact on those plans because they haven't spent the time to actually deliberately practice those skills to enact the right behaviors in their trading. I'll leave it at that. Next, mentors. Okay, so mentor is such an important facility to have. I see so many traders that I've spoken to, the ones who grew really quickly, or who developed really quickly rather, who were able to find depth in their trading and success in their trading. It came because they had mentors, or at least colleagues, who were able to point them in the right direction. So having mentors can really shortcut your success versus simply failing forward and learning by all your own failures. That's certainly a way of succeeding, but it just takes a long time, right? Because you're trying to learn from your own failures, when having a mentor, that person can easily direct you and say, don't bump your head into this wall. You don't have to do it that way, right? So if you can learn the lessons from others, you don't necessarily need to learn the lesson for yourself. The other really powerful part about having good mentors is the ability for a mentor to model something for you, right? So mentors, and some of the best mentors I've had, they've helped me see things when I didn't even realize they were possible, right? So literally there was a whole part that I didn't think was even possible until someone showed me, yes, you can make money trading this way, or yes, you can manage a trade this way, or have you thought about doing it this way? And that can just be so enlightening sometimes when you have that person giving you that right level of inspiration at the right time, right? That can really shift you markedly in your progression. As well, once you have a good model, it's very easy to begin to, during your trading or doing whatever you're doing in terms of how you enact your trades, asking yourself a key decision points. What would this person do? Right? So, your mentor, whoever you believe to be, whoever you have as a role model or someone who can support you, who is skilled and someone you look up to. What would this person do in the situation? So the markets are, crashing down. Would this person give up? Would they, leave their position open and with no stops in it? What would this person do? Right? And to begin to act more like that mentor. Okay. And nextly is continuous learning. Okay, we've kind of touched on this already at a high level, but I'll leave you this one saying. The greatest predictor of long-term success is learning and improving every day. That is, we need to incorporate, the best traders I know have great feedback loops to help themselves find out where they can improve, right? Because if you're not getting better, you're getting worse. Because the markets are constantly changing, the participants are constantly changing, it's getting more and more competitive. And so once again, we have to stay sharp, and that is we have to have the right feedback loops in place so that we're constantly developing ourselves. Because this, again, is not a game or a journey where there's an end point. As I mentioned in the beginning, it's not a destination. And as soon as you think you have arrived, guess what? You stopped learning, right? All the traders that I've seen who believed that they were quote-unquote good enough, well, several years later, if they didn't start, learning again and getting better, they went out of business. So if you stop learning, you stop earning. And again, this is I think a point that I'll leave with you there. All right. The next one is, and the last one in this particular category, is the ability to have cognitive flexibility and adaptability. Okay, and here's a quote by Sir John Templeton. He says, "Bull markets are born in pessimism, grow on skepticism, mature on optimism, and die on euphoria." And the best traders that I've seen, they can have strong opinions, but they're weakly held. Right? That means they're not dogmatic about their opinions. They're able to, have that cognitive flexibility and change when they need to change. They don't go down with the ship, right? They don't try to be martyrs and stick to their opinions. So, at the end of the day, the markets are what's right? Price is what matters. Price is what pays, as the saying goes. So think about it. How many people missed out on that huge bull market that started right after, the market crash of 2008, 2009. When we crashed down to, the 6-6 level on the ES, many people thought it was going to go a lot lower. And no one believed in the rally that ensued from that kind of V-turn up, from that bounce. And in fact, to this day, it's 2017, this rally that started since 2009 is probably the most hated on rally of all time. Because most people didn't have the adaptability, the flexibility to change their opinion about that, that the market had now changed. It was no longer a bear market anymore. We were now in a bull market. So, yes, drop dogma. Let's talk about psychological states now. Okay, and here are some of the psychological states that peak traders and the peak performers embody. First off is self-confidence. This is probably one of the most important states for a trader, right? And and sometimes self-confidence can feel like kind of riding on this unicycle that I have in front of us here. And if you ever try to ride on a unicycle, it's hard to keep your balance. And sometimes that's what you see in trading. You see a lot of traders, their confidence is all over the place. Sometimes they have really high highs, and then sometimes the lows are really low. And the problem is that there isn't some sort of optimal level of confidence. I think what's better to have is to have a stable level of confidence, right? So there isn't one set point that you should be aiming for. I think most really good traders have built stability in their confidence so that the variance between those peaks and valleys are a lot smaller. Versus newer traders or traders who are struggling, their confidence is all over the place. And unfortunately, unstable confidence is usually based on a few things. Number one, if you have unstable confidence, or this, if this resonates with you, if you have issues with confidence, I'll just share a couple of things. In my belief, if you have issues with confidence, it's probably because you have two things going on. Number one, you have a mental gap in the way you perceive your skill level and reality. So you may think you're a lot better or worse than what you really are, and versus the actual results you're getting. And number two, and because what's probably happening is that you're attaching your confidence to short-term results. You may or may not yet have a long-term history of results. So every single trade, or every multiple of trades, has an you're overweighing the impact of those short-term results. So at the end of the day, the way you begin to achieve stable confidence is a little beyond the time we have here to talk about this topic in depth. But in my belief, it's kind of based around these three ideas. Number one, you have to have trust in yourself. You can't have confidence without trust. So if you don't trust in yourself, how can you be confident in your trading? Like if you don't trust your behaviors, what you're going to do, what you're capable of doing, then it's going to be very difficult to have stable confidence. Trust can only be achieved once you've created a bit of a track record for yourself. You have trust in your system. You have trust in your behaviors and how you're going to act. Second is belief. You need to have belief in what you're capable of. Right? So yes, you're going to have ups and downs, but do you have the belief that you can actually pick yourself up and pull yourself up again if you fall down? If you blow up an account, do you have the belief you can make it back again? These are things that relate to belief. And finally is faith. Right? So what kind of faith do you have in yourself? Not just the belief, but the faith that, if the worst comes true, do you have the ability to actually to withstand that? Do you believe that that you committed enough, and you believe that this is in fact the endeavor that you've chosen, right? And then with those three things, you can build a really strong base of confidence. Let's move on now. Let's talk about emotional regulation. All right, so this is kind of a deep topic, but unfortunately, we're kind of going long. So I'm going to only touch on a couple of points here as pertains to emotional regulation. We all know in trading that it's important to manage our emotions. That there's no question about that. Again, some of the best traders are the ones who are not overly emotional. They don't work like robots necessarily, but they have strong abilities to regulate their emotions. Some of that regulation has to do with their ability to manage their highs and lows. Some of that's their ability to physically calm themselves. They have various practices they may use to physically calm themselves during the trade or after the trading day's over through either meditation or physical fitness or some other things. And the other part is just having the ability to manage accumulated emotion. That means you don't let that emotion build day by day by day by day. Right? And that's where things get dicey if you leave emotions unchecked. A lot of traders, they don't do the work, they don't have the habits in place, the mindset in place to release that those emotions day by day. And it's basically like accumulating baggage, right? It's emotional baggage. And if you don't actively have the mindset, the processes to release some of that emotional baggage, you will carry that forward, and eventually it's going to be like like a cork popping, and you end up blowing up an account or behaving in ways that you don't want to behave. And so the best traders, those peak traders, they have methods, processes, whatever you want to call them, routines in place that allow them to manage their emotions during the trading day, but also so they don't carry them forward. Nextly, the skill of being focused. So being focused is such an important part of trading, right? And I think key to understanding focus is the ability to actually have stable focus, and the ability to have the ability to also be able to concentrate. So if you have poor stability around focus, then you're gonna be bouncing everywhere, right? You have distractions all in your trading room. Then you're just not focused on the right thing at the right times, and so that's impairing your decision making. Likewise, if you have poor concentration, then you just can't concentrate for long periods of time, and you just won't be able to stick with it when it requires you to have some discipline around what you need to be paying attention to. So if we actually drill into a little bit further as pertains to concentration, it's actually quite nuanced, and I think it's important just to bring it up quickly. And this is from a book called The Foundations of Sport and Exercise Psychology by Weinberg and Gould. Great book. But there's 4 key factors around sort of focus and concentration. Number 1 is selective focus. That means, what am I choosing to focus on and having the right things I need to be focusing on. Okay. Number 2 is maintaining that attentional control. That's the concentration part we talked about, right? So how long can I maintain that attentional control for? Is it, am I just jumping back and forth and because I'm so distracted, or I just don't have the strong disciplined mind to pay attention to things for a long period of time? Thirdly, situational awareness. So that is, can I see, do I know what I need to be focusing on, right? And seeing things in their bigger context. And finally, be the ability to shift attentional focus. That is to zoom in, zoom out, forest trees, and having that skill of being able to zoom in, zoom out at the right times, right? I see a lot of new traders, especially, they overweight the small time frames. So they might be an intraday trader, and they're spending all their time looking at the 2-minute chart, and they're missing the bigger pictures on the 10, 15, 30-minute chart. They're not seeing the bigger picture, so they have very little context in terms of their trades. And so again, put all these together, and that creates that strong focus. Okay, moving forward. Ego management. Okay, and this is such an important one as it pertains to our psychological well-being. Is how are you managing your ego? And I know it's really easy as traders, right? I think all of us have been there, where after you've made some good trades, it's really easy to feel like the king of the world. But guess what? When you have that large variance in your ego, you're really sowing the seeds for your own misfortune down the line, right? So the key thing here is, and you see the most successful traders in the world, they're very humble. They know exactly who they are. They're not like this kitten, this picture here. You have a kitten looking in the mirror and looks like a lion staring back. They don't see that, right? They have a really good understanding of who they are, what their strengths and weaknesses are, and they're comfortable with those things, right? They don't think there's something else. And so learn to be humble. Learn to accept who you are and what you bring to the game. And at the same time, you got to learn to be grateful. So whether you lost a bit today, made a bit today, made a lot today, lost a lot today, still learning to be grateful really allows you to come from that place of humility, even when you're on a really, really, big upswing. Just being grateful for the small things really allows you to keep that ego in check. Okay. Now let's talk about psychological traits. This is the final category. The second final category. And the first set of traits that I've decided to choose here is even temperament. So this is such an important trait to possess. Is one where your highs are not too high, as we talked about before, and your lows are not too low, right? Because I think one of the most salient things I ever heard from a trader is, if you're this excited when you're up, how are you gonna feel when you're down? So if your highs are really high and it's like you're riding a roller coaster, I'm pretty sure your lows are very low as well when you're not making money. And so the key thing there is to begin to have that even temperament, to begin to reduce that variance between those two spectrums. Nextly, resilience, right? How do you bounce back from challenges? Because trading is ultimately a loser's game, and that is the trader who manages losing the best wins. It's not about the most winners and how much money you make on your winners. It's how are you handling your losers, how do you handle discomfort in trading? Trading is all about about managing discomfort and how good at you are getting up after getting knocked down. And so the best traders are those who are the most resilient. Thirdly, being just analytically oriented. This is a really powerful, very useful skill to have or trait to have in trading, because trading is ultimately a probabilities game, right? So once you understand that, it's all about math. So if if that's not your strong suit, then what can you begin to do to begin to take some material steps to becoming more analytically oriented? Whether that's perhaps brushing up on your calculator, your simple arithmetic skills, or even further, can you begin to develop yourself around learning new software scripting languages or new development languages, so that you can begin to join some of the newer ranks of trading around building algos. Okay, and that's ultimately the future. So this game is not changing. In fact, the traders who are succeeding the most now are the ones who are most analytically oriented, but also have that balance in terms of emotions. Nextly, self-discipline, right? And this is kind of a paradox, but as Aristotle says, through discipline comes freedom. And I love that quote. If you think about that for a moment, you can ponder that. Through discipline comes freedom. A lot of us come to trading thinking that's the Wild West, and we can build anything we want in our trading careers, and that we can act any way we want. What you realize quickly is that the more structure you have, the freer you are as a trader, the less stress you have, the less work it becomes when you have that discipline. So the structure is so important. And the same, just as important as self-discipline, is self-control. And if you see this picture on the video portion of this presentation, you'll see a picture of the Family Guy, and he's got a big button behind him with a sign above it that says, "Do not push button. You know you want to." Right? So do you have this self-control, number one, to stay out of the trades, or not perform the behaviors you shouldn't be performing? And number two, do you have the self-discipline to be doing the things you need to be doing? That's maybe doing your researching your stocks, going over your journal, logging all your trades, whatever it may be. Those two things are so important as pertains to peak trading performance. Next one, self-awareness. And self-awareness kind of comes in two very important principles. And the first part is the ability to have an accurate self-assessment, and secondly, having strong emotional awareness. Okay? So self-assessment simply means, how well do you understand yourself? How well do you truly understand your strengths and weaknesses? Or have you simply covered over all your weaknesses? So that's what a strong self-assessment allows you to do. Is that allows you to be honest, and allows you to create that continuous learning process, because you're not afraid of your weaknesses, and you understand where you can get better. The second part is emotional awareness. All right, and emotional awareness is around how well you actually can interpret your emotions, your emotional life, your inner life, your emotions. And there was a great article that came out on Bloomberg back in November, maybe earlier last year in 2016, that came from a paper that was called "Interoceptive Ability Predicts Survival on a London Trading Floor." And basically, the study was done by John Coates. He was the author of another great book called "The Hour Between Dog and Wolf." And what they found is that the most profitable traders were those traders who had the highest levels of what they call interoception. Simply, it's a fancy word to describe how well are you at judging or feeling your inner states. So, if you have let's as an example, what they did in the study here is, how well were these traders able to notice their heartbeats? And what they found heartbeat without using any measuring devices, just using their levels of self-awareness. What they found is that the best traders had the highest levels of that kind of awareness. So it speaks volumes, right? Because you can very well see that if you're disconnected from yourself, then you don't know the mass of thoughts, sensations, and emotions that are running behind the scenes, because you don't have a high degree of self-awareness. The more you understand yourself, the more aware of yourself, the more control you can have, the more management you can have over your actions. Okay, that takes us to the end of that category. So the final category now is around motivational processes. I'm saving this one last because this is probably the one that's going to give you the most kind of a takeaway as pertains to what you need to be doing to be able to sustain all these things for the long run. First off, in terms of motivational processes, great traders, those peak traders, have really great goal setting skills. And so that means they have, inside their development plans or inside their processes or their habits, process related goals, performance related goals, and outcome goals. So all three of those goals. Now, we don't have time to get deeper into goal setting today, but outcome goal being, let's say you want to make a certain amount of money a year. Performance goals being, what is the qualitative aspect of that? So how efficient can you be around achieving that goal, right? And the process is what physical steps, what actions you need to be taking, and how well can you follow those processes. Okay. Nextly is positive self-talk. So, let me ask you, are you your biggest fan or biggest critic? Right? In trading, it's a tough game sometimes, right? It's very easy to personalize failure, right? It's very easy sometimes to not be able to disassociate the trading from the trader. I liken this to saying something like, I screwed up on a trade, or I'm a screw up because I screwed up that trade. All right? So did you screw up, or are you a screw up? Two very, very different polarities there. Right? And the core of this is that most traders, if they have good self-talk, it's because they have deep self-compassion. They have compassion for themselves. They have a bit of humor to what they do. Right? It's not the end of the world. Yes, you make a mistake on a trade. Everyone makes mistakes. Even the best traders in the world, they make mistakes all the time. Every single trading day, there's a mistake to be had. But can you take it in good humor, or do you make that a global assessment of who you are as a person? Right? So begin to cultivate that if you struggle with that. I think a lot of traders do struggle with that because it's easy to be very hard on yourselves in this game. But guess what? Does it really help? That's the question you have to ask yourself. Does it really help you to beat yourself up and beleaguer yourself with negative criticisms? Next point, passion for the game. All right, so let's leave with that one quote there. I'll just kind of speed along a bit here now. Passion for the game is really ultimately what's going to drive you and fuel you for the long run. All right, this is where commitment comes from. If you don't do what you love, do something well enough to love what you do. So you may not love it when you first begin, but you can fall in love with it. You may not love every aspect of trading, but there are certain elements that you can really, really begin to fall in love with that'll carry everything else forward. Because ultimately, if you don't have the passion for the game, you won't be able to sustain the required efforts that are oftentimes needed to get to the next level, to overcome that next hurdle, to break through that next glass ceiling. It's only going to be the passion that's going to allow you to fuel your ambitions moving forward. Okay, so in summary, I gave you those 5 different categories of skills, traits, states, and processes, and I've hoped you found some of these useful and you've begun to measure yourself against some of these. Now, I didn't put in every single trait and skill that's that I think that are important, but I kind of capture, I think, and try to distill the essence of what I think is what I see a lot in in some of the best traders that I've come to know and the ones that I've spoken to. And so I'll leave you with one final conclusion. And this comes from the principles around the science of the individual. This is a new field that comes out of Harvard. And this really is going to, and I've talked about this previously in a podcast, but the science of the individual allows you to take some of these ideas that I've, shared with you in this presentation so far, this discourse. And, maybe asking, well, how do I move forward with this? And I want to share these three principles because at the end of the day, we're all different, right? So some of these things may resonate with you, some of them, they may not. And that is perfectly okay because guess what? At the end of the day, we're all different and we will all be different traders. And that's also okay. And here are the three main things to keep in mind. Number one, talent is jagged. That's called the jaggedness principle. So out of all those things that we talked about in those 5 different categories, recognize that you're going to have, a jagged profile as pertains to your level of competence in some of these areas. And that's okay. There isn't any single trader who has these things, at 100%. And no one's at a zero either, right? We're all different. So we all need to honor that difference, but recognize that, right? That sometimes we're different and there's some areas that I could perhaps be improving on. Secondly, context matters, the context principle. Okay? So it's very important to recognize that, yes, I've talked about a number of traits and states and processes and skills, but it's important to try to work on these skills in the right context. We talked about discipline as an example, right? I've talked about this before in other presentations and podcasts, but discipline's an interesting example because, I see a lot of traders and they say, well, I'm not disciplined. I just can't follow my trade plan. I have problems, keeping my stops or executing whatever that quote unquote discipline problem may be. But guess what? And they label themselves, they assess themselves as being or having poor self-discipline. But guess what? That same person, that same individual can wake up at 5 o'clock in the morning every morning, go to the gym for an hour, get themselves ready, send their family off to work or to school, and then get themselves to a trading desk to work, right, on time and early. Can you tell me that person isn't disciplined? It sounds like they have a lot of discipline to me. It's just that the discipline changes based on context. So your behavior can change based on the context, and that's important to understand. So the way you train that behavior or that skill or trait, whatever you're working on, has to be specific to that context, because a lot of skills are not what they call transferable. So just because I can wake up every morning at 5 and run a 10-kilometer run, that may not actually have any transferability to my ability to keep stops, right, and take my stops when a trade goes against me, right? There may not be any transferability there. So recognize that context matters. Okay? And lastly, the pathways principle. It's the last one I'll leave you with today. The pathways principles tells us that there are multiple ways or paths to get to the same outcome. Okay? This goes right back to what we talked about in the beginning. Trading is a journey, not a destination. And that means, they say all roads lead to Rome, right? But there are many roads. And so, there isn't any single path that's the best path. It's all based upon you, right? Some folks, they had great paths. Maybe you worked for an investment bank and you had the best training in the world. And others, you're self-taught, self-learned, and you have to honor that dichotomy, right? There is no right or wrong way. It simply is. Okay, now what are you going to do with that, right? You got to honor your path. You can't wish things to be a different way. It is how it is, right? So honor your path. Recognize that there's strength there, right? And whatever path you're on, and then recognize that it's your path, and no one can tell you to do it differently. Okay, because at the end of the day, no one can trade like you, and you won't be able to trade like anyone else because you're different. We're all different. All right. Well, I hope that helps. In conclusion, once again, we've went through a number of categories as it pertains to performance in trading, and I hope that you've been able to gather some things that you'll be able to take back to your own trading so that you can begin to embody some of these skills yourself.
You've been listening to the Trading Edges podcast. We've taken this interview and summarized all the big ideas so that you can take action. Just head over to thetradingedge.org/podcast to find the show notes, transcript, resources, and to continue the conversation.